Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is April 15th, 2011. Happy tax day to everybody here in the U.S. I wish I could say today was a happier day for me, but unfortunately it's not. But that's I suppose a decent thing, because good trading means higher tax bills. So you just have to make do. Although when I take a look at what's going on here in the U.S. with these budget bills and all this stuff, I can't help but get a little bit I don't want to say angry, but just disappointed in the way things are going here in the U.S. Essentially, I'm writing a big check to the U.S. for money that I made that they decide to spend profligately however they want. Now, that's not to say I'm an anti-tax person or don't think that I should have to pay my fair share, but at the end of the day, they've got to revamp the system to try and figure out what's going on. They need to have, what would be great if they did like an a la carte system where you could decide where you wanted your money to go, take a 3-year moving average of it, and then that's how they could figure out their how to project the budgets for each of these areas, where the cuts need to be made, and so on and so forth, rather than just electing a guy who says, yeah, I'm going to do this for you, and then not do it, or potentially do it and go overboard. Boom, you have the numbers right there. The public has spoken. That also says that people who actually do pay taxes have maybe a little bit more say in where the money goes. It's pretty easy to say, yeah, I think we should put money here if you don't pay taxes. And they just came out with a study that said something like, 50% of the people who don't pay taxes think that they do pay taxes. So some of these people who get these big refunds at the end of the year, they realize, well, I'm getting money taken out of my check, but yeah, net at the end of the year, you're not down, so you don't actually pay taxes. So, the tax structure probably needs to be revamped some, and it's going to be interesting. But today the House is going to vote on Paul Ryan's budget proposal, which is a little bit draconian in the eyes of the current administration, but it's a good starting point, I think, and we're going to see how how that goes. The House is likely to pass it, but I don't think it's going to make the Senate. But let the debate begin, as I said yesterday. So that's going to be interesting. One of the other things that we're looking at today is that overnight China came in with their growth figures, and they continue to grow despite what's going on around the globe. They've got their own little juggernaut going there. All right. Now overnight they reported GDP growth. Let's get the figures here. Growing 9.7% for the year versus an expectation of 9.4%. All right, the year-over-year number for March was 5.4% versus the expectation of 5.2%. So you can see that that's very high growth. They're still cruising along at about a 10% clip at a time. All right, but their PPI data and their CPI data came in much higher than expected, showing that they still have inflation going on over there as well. So let's see, PPI data 7.3% rise. It was the CPI data that came in at 5.4%, not that GDP. So that's what they're looking at China. So anytime you see that they have this inflation going on, this growth going on, it always scares the market, because they think, well, China's going to have to raise rates to combat this inflation. Well, China does things a lot differently, and we're starting to, and they're not starting to realize this. We know this, but they can go on for a very long period of time. Well, why is that? Well, it just turns out that they have now $3 trillion, in foreign currency reserves, and the G7's request for them to do something about their currency peg to allow their RMB to appreciate falls on deaf ears, and they say no, and all they do is they sit here and they collect all this money based on a manipulated price of their currency. I get it. They're an emerging market. They're a very large country, but there are a lot more countries that have floating currency rates that do not have to hide behind a currency peg, and they're basically the second largest economy. So there's no excuse anymore. It's time to get tough with China. That's my stance. So you can see here the Aussie, just looking, it's a little bit lower here. I'll cruise over to the 5-minute chart. Okay, you just see it sold off a little bit overnight on this Chinese deal, and what that does is that also increases demand for Japanese yen as people start to unwind some of these carry trades. Okay, so you can see that we've got the yen. Let me go over here to the week. Okay, you can see that we've got the yen strength, and it looks like maybe we're going to come back down on the 30-minute chart, put in possible double bottom here at 83. We've also got the euro lower overnight. Let's see, Ireland's debt was downgraded. No shock there. We're going to revisit this issue in the eurozone. Portugal bailout. Now they're talking about Greece needs to restructure not only their debt but possibly their entire country. The issues aren't finished over there in Greece by any stretch of the imagination. All right, and then lastly, we've got the CPI data that came in the eurozone a little bit higher than expected, but we kind of knew that. That's why Trichet decided at the ECB to raise rates. All right, but we're going to have U.S. consumer price index CPI data coming out at about 8:30 this morning, and that's going to show us where we are in the inflation debate. They're expecting a gain of 2.6%. We're going to see how that comes in. Don't forget that these numbers are so massaged, and that the Fed doesn't really look at I don't even know what they're looking at anymore. The core versus the headline. It's all it is. It's not telling. I can tell you that much. When you go to the gas station, you know that there's inflation. So keep your own metric of what's going on there, and don't listen to the Fed. All right. And then later in the morning, we're going to have the Michigan consumer confidence figures. So right now it's the kind of thing where we've got QE2 is driving inflation just about everywhere else around the globe. It's driving it here in the U.S. Only we're afraid to admit it. The question is, will this CPI data be strong enough that shows, hey, we do have inflation? QE2 ends. The Fed's got to start tightening or allowing rates to rise. We know that if QE2 does end as they say, then rates most likely will rise because they're being kept artificially low. But the question is, would they go right into a tightening cycle immediately coming off of this? And I would think that would be a little bit irresponsible at this point. So that's kind of what we're looking at. It's tax day here in the U.S. Everybody is going to be a little bit lighter as far as money that they have left to go around and spend. They send it to Uncle Sam, who spends it profligately. All right, and then you can see that China is just still continuing to grow. So Chinese growth is going to pose a risk to some of the other global recovery, because the idea is that people think China needs to slow down and that they're going to potentially raise rates again. They have been raising rates, and as you can see, it's had very little effect so far. So that's what I'm looking at, folks. Have a good weekend and good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.